that is the top of the hour.
Indeed it is. Welcome, everyone. Morning, JVC. How you doing?
Good morning. I'm doing real well. Been looking forward to this all week because it's going to be fun.
Yeah, indeed it is. So welcome, everybody. We have got a mixed audience today. We have got, looking down the attendees list, and so we've got a bunch of members of the Trading Research Group, of which I, Lee Harris, am one of the co-founders. Jonathan is our community manager. We've also got some people who have come in either as a result of seeing our posting from the Sierra Chart support board. We have got a really nice, close collaborative relationship with the guys at Sierra Charts, one of the platforms which we use heavily. I've been using it now since 2014, 2015. Jonathan's been breaking it for a good number of years as well.
Hey, sort of when you're good at something, you know.
Hey, it's like the inverse Midas touch, isn't it?
Hey, I used to get paid for that.
Indeed. And I guess as well, we've got a few people who may have joined us from our Volume and Order Flow Traders Facebook group. So this is Platform Prowess, and we run these public meetings periodically, really just based on hints and tips around the platforms that we use. This is the second one we've done on Sierra Chart. And what has triggered this off is the availability of some updates to a trade replication, order replication feature in Sierra Chart that we've been waiting for, actually, with quite some eagerness. And in the current pre-release version 2371, Sierra Chart have enhanced it. So what we'll be doing today, let's say I'm Lee Harris, I'm the guy on the left. I'm co-founder of Trading Research Group. Jonathan Van Kloot will be driving Sierra Chart today. He's the long-haired creature in the middle, sitting on the lap of some dude with glasses.
We are both obviously not fans of haircuts. So
indeed. So what we'll do today is just explain why trading multiple accounts from a single platform can be interesting. And then Jonathan is going to walk through the mechanics of trading multiple accounts in Sierra Chart. And we'll look at some of the gotchas on this feature, but how you go about setting it up, how it works, etc. We'll also look at how you go about managing risk in multiple accounts from a platform perspective. What we'll then do is see how you can apply this to trading evaluations. And our friends at one of the trading evaluators have actually come up with an exclusive offer for people who are involved in this webinar based on multiple accounts. We'll get into what that's about towards the end. So it's quite a tasty offer. Then we'll be happy to get into open Q&A, pretty much about anything trading related. It's Saturday, it's kickback time a little bit, but certainly in the context of trading evaluators, how you can hack evaluations, how you can trade multiple accounts, this kind of thing. We'll be happy to riff around that for a bit of time, for as long as there are questions. So we can use the Zoom chat for questions. I'll moderate those questions while Jonathan's talking. I'll probably feed them in so you can concentrate on your material. Jonathan. And I'll take a view, whether we address some things at the end or some stuff's going along, and I'll interject as need be. So let's just go on to the next chart and see why trading multiple accounts can be interesting. What we've got here is some screen grabs from Rhythmic's RTrader Pro. This is Rhythmic's account management software that you use whenever you trade on Rhythmic. And here are some evaluations that I've undertaken recently. Pretty much every month I've got trading evaluations on the go, either actually evaluations or funded accounts. And I do this to put leverage on leverage, which is something I'll come back to towards the end of the presentation and explain it. But what's been happening in this space, and for those of you, well, I'm going to presume most people who have come to this, if you're a Sierra Chart user, you're quite serious about trading and you understand the futures world. But you'll certainly have come across the company known as Top Step Trader. The idea is prove you can trade, pass the trading test, achieve a profit goal over a set number of days, and you get a quotes funded account. May or may not be a cash account, doesn't really matter, but stick within the rules. You can trade with, quote, their money, and you can take it to a level and get some money out. Now, a year, maybe 2 years ago, one of the newer entrants in this space started quite heavily promoting the idea that you can trade more than one account. Was this a cash grab from them? Don't know. But you can use this to certainly reduce risk, or you can use it to gear up. And if you can replicate your trades across multiple accounts, and you've got a proven strategy, then it's quite an interesting way of getting a decent return on your time. So if a street price on a quote 50K evaluation is typically 80, $90, that sort of level, some of the evaluators will actually let you take out and run up to 20 of these in parallel. So if you can pass 5, 10, 20 in parallel by copying your trades, it can be quite efficient if you're able to get these accounts to a position of withdrawal. So what you're seeing here, some screen grabs of when I've taken evaluations all at the same time, trading accounts in parallel, and I've set the platform up to throw the same orders in across 10 accounts, sometimes even 20 at the same time. Obviously, if I get things wrong, I've multiplied that problem 20 times. If I get it right, I'm doing, I'm gearing up. I'm getting the same amount for the same amount of work. I'm actually able to generate a profit in multiple accounts. Now, we've got one question. Does trading multiple accounts mean within Rhythmic RTrader Pro or within Rhythmic RTrader Pro and AMP? So let me really clarify some of the terminology in that question. Rhythmic's RTrader Pro is a client-side account management application for a single connection to a brokerage. Yeah, Rhythmic is a data feed provider and they route orders. They have software that actually does charting and you can trade with it, but most people use it to monitor their accounts. You could have multiple accounts at different brokerages or evaluation firms, all of which are on a Rhythmic feed, but these are still multiple accounts, different logins. You could have a cash account at a brokerage like AMP or Ironbeam or Dorman or Phillip Capital. That could be on a Rhythmic feed or a CQG feed or the Sierra Denali feed with Teton order routing. What we're looking at today is how you trade multiple accounts on the same physical data feed login. So let's think of this at the same brokerage. For the purposes of what we're seeing here as a trading evaluator, think of the evaluator as a brokerage. So if you have multiple accounts under your single data feed login, that's what we're looking at today. We're not looking at how I can place an order on a trading evaluator like TopStep and then have it copied to a cash account at a brokerage like AMP or Dorman. Yeah. That's something different. Alex is asking, why not trade bigger size on one account than copy the same trade on multiple accounts? Because of risk and drawdown, Alex, but let's explore that at the end. Yeah, once we've gone through the mechanics. We'll look at some of the parameters on trading evaluators and how trading size, could hurt you. And this is the angle that some of the multi-account evaluators really start to push out there. But we'll do some worked examples on that. We'll come back to that and make a note. And Jan is asking which evaluators have that with the several accounts with the same login. So what you find is Lilu, Apex, Elite Trader Funding, they're all the ones that heavily promote multiple accounts under the same login. And Jean-Pierre JP is saying this means multiple accounts within one evaluator on the Rhythmic feed, correct? 10 accounts on Apex, for example. Exactly right. So when you have Lilu or Apex or whoever saying, here's a deal, and you can take this deal up to 10 times, you will end up, as you see on these screenshots here, so the top one is Elite Trader Funding, who are relatively new in this space. They had a launch offer. You could use it up to 10 times. Yeah, on the coupon code, you can see I had account 128399. That's the account number. I doubt I'm the 130,000th customer, but I had 10 sub accounts. Yeah, 0001, 0002, and they were all live at the same time. And my trades were being copied by my platform, Sierra Chart. So as I put an order in, I was placing the order in the dome on account 0001. And that order was being duplicated by the platform into account 2, 3, 4, all the way up to 10. That's what we're looking at today.
By the way, Lee, just to piggyback real quick on that, and correct me if I'm wrong here, but the ability to have multiple accounts show up under one platform login within Sierra is really a question of Rhythmic and not the evaluators. I believe it's just not all evaluators necessarily encourage multiple accounts, except those three that Lee mentioned definitely push that.
Yeah, off the top of my head, I think UProfits are happy for you to have two. I think Earn to Trade will do a couple now. Top Step, you can well, even Top Step, you can have multiple evaluations going, but you can only ever have one live / funded account. So I don't know why you do that. But let's face it, they're all happy to take your money. So you can try and pass. But it's only really Apex, Lilu, and Elite Trader Funding that are banging the drum on, have 5, have 10, have 20, and trade them all at the same time and go live on them all at the same time.
And blow them all up at the same time and pay us all at the same time.
Bruno is saying, if I have an AMP account, can I use Sierra Chart subscription at the same time to use as an evaluator? Absolutely. I'm going to vaguely qualify that, saying unless it is a platform that's being provided by the brokerage, but I don't think Sierra Chart are doing any white label brokerage supplied deals anymore with any of the brokerages. It used to be the case if you took Sierra Chart from AMP as, quotes, free platform, it was locked down to AMP. But now if you are paying Sierra Charts directly for the platform, then you can absolutely, if you've got Denali 11 package, you're fine, Bruno. You can connect it to any, in fact, even ignore the broker. Yeah, if it's a data service that Sierra Chart supports, Rhythmic, CQG, whatever, then you can connect your Sierra Chart to whatever you want. What you can even do is replicate the installation of Sierra Chart. You can have 2 Sierra Chart installs on your computer. This is what I do on my machine. I have an installation for each brokerage or each evaluator that I'm trading with. So I have a folder which one of my cash accounts is with Ironbeam. Yeah. So I've got Sierra Chart -Ironbeam. Then I've got Sierra Chart -Lilu, Sierra Chart -Apex, Sierra Chart -Elite. So I never switch accounts. I've just got multiple applications installed on my machine, and I can launch any of them. I'm into that account. To Alex's question, no, you can't copy across more than one Rhythmic login. Yeah. Because your platform is only connected to a single feed. In the NinjaTrader world, there are various trade copiers. With Replicanto is the most well-known one, which run inside NinjaTrader, and client side will connect to multiple data feeds depending on your NinjaTrader license. That's one of the gotchas, and will replicate the positions locally. But there are some big risks on doing this, especially client side. But what we're looking at today is replication on multiple accounts on the same data feed connection in 36-point bowls capitals. Yeah, we're not looking at how you replicate across multiple connections. Greg has made the comment / question. My understanding is Sierra Chart no longer works with Rhythmic. Going forward, they will only support Denali. No, not the case. Let's make a difference between support, as in tech support, and working. Yeah, Sierra Chart has direct connection to Rhythmic with some new code written by Rhythmic. It's called, I think, Rhythmic Direct Connection or Rhythmic DTC within the Sierra Chart dropdown. You can work absolutely fine. You can trade absolutely fine using Rhythmic in Sierra Chart. The quality of Rhythmic's live data is pretty good. The historical data, especially through evaluators on the Rhythmic paper trading server, is not fantastic. There are caps on how much historical data you can download. But there is no problem at all, Greg, in connecting Sierra Chart to a Rhythmic Fed account.
Sierra Chart not supporting is that they won't give you tech support. That's what they do.
Yeah, their stock position on any issues around data are we have our own data feed, Denali. We recommend you use Denali. And they also recommend their own Teton order routing, which is their own direct connection to CME. And there's a decent number of brokers and FCMs now that support that. I recommend to anyone who is using Sierra Chart, pay for the Denali data feed. The quality is excellent. You get market by order information, which you can get MBO, market by order information on Rhythmic data, but it's not displayed on Rhythmic in Sierra Chart. I think if you are remotely serious about trading as an endeavor, it makes total sense if you have Sierra Chart to pay for the Denali data. Now, what you can then do, even if you trade, well, if you are trading a cash account and you have Sierra Chart, I don't see much point in using Rhythmic, frankly. You may as well use Sierra Chart's Teton order routing because there's no transaction fee on the order routing. So you'll find that there's certainly 3-4 FCMs now and the corresponding introducing brokers who support Teton. But if you are signing up with an evaluator, the order routing is effectively over Rhythmic on the paper trading server, but you can still use your Denali data. And that's the best combination. Let the data coming in be the best quality data, which is Sierra Chart Denali, and how the orders go in doesn't matter. So non-issue at all, Greg, in using Sierra Chart with Rhythmic and therefore trading evaluators.
Quickly, we've got some weird bursts of noise on your end. Yeah, there was.
Yeah, I think I've got a loose wire in my headset. It's time for an upgrade.
That's what it sounds like. Yeah,
it's been talked out. It's too much rubbish has been passed through it. Where were we? So with Sierra Chart, you are on a hiding to nothing if you go onto their support board, though, and ask for help about any connections into Rhythmic or CQG or interactive brokers, because the stock response is, these are all crap, you should use ours. And they don't want to provide support for things out of their control, which I kind of get. And it's entertaining to watch the hair on their back get really spiky and prickly when people ask them. Yeah, exactly, you get yelled at, but why not? So there's a high level of why replicating trades across multiple accounts can be useful. And we'll go back to, Alex asked the question of, why not trade bigger size on one account? We'll come back to that towards the end. Around open Q&A around evaluations and hacking them, this kind of thing. But what we'll do now, I'm going to pass over to Jonathan, JVC, and he's going to walk through the feature, and I think you're actually going to bring the platform up and show some configuration and things like that. So teach us how to use this thing, JVC.
All righty, absolutely. Cool. So let me just jump into a couple of sort of beginning pointers on what is and what isn't this whole thing. It's sort of talked about not a lot. You don't hear about this at all. And at least I haven't encountered anybody really talking about this too much. But this is, in fact, just a standard built-in feature of Sierra. This isn't a third-party thing. It doesn't require any extra goodies or plugins or anything. It's completely built in. It doesn't cost anything extra. You don't need a special data package or anything like that. I do, however, consider this to be alpha software. And I would argue that Sierra Chart themselves probably do too. They are very much actively working on it, but it is, it's a new thing. They're pretty good if a feature, generally speaking, if a feature is in any release version, it's stable. I have very rarely run into something that had some big problem in a release feature. It happens occasionally. I have found the occasional bug, and they've usually been, if it's an actual bug, they've been pretty quick to fix it. But what this is technically called within the platform is order allocation to trade accounts. That's a mouthful. They don't call this a trade copier. They call it an order allocator. And you'll see, and that's really, it is an accurate description, and you'll see why in a moment. But you won't see any reference to a Sierra Chart trade copier out there because that's not what they consider it. And it is, as the name suggests, it's an order copier, not a position copier. And there's some important distinctions there that I'll get into in one of the next couple slides. As I mentioned, they are still adding features. There's a bunch of stuff that I would want to see in a trade copier that is not currently there, but it is coming. In fact, that was the impetus for this this session was a new feature showed up that we had been really, really waiting for. And all of a sudden I noticed about a week ago that it's there. Oh my God, when did that happen? All of a sudden it was in the pre-release version. And that changed the nature of this feature for me, and all of a sudden made it something really usable, instead of usable, but you got to be really careful about certain aspects of using it, and you have to do it in a kind of a weird way. But yeah, there's a lot more features to come, and Sierra has said that they are now actively focusing on this. There's been a lot of requests for it, and a lot more people starting to get into this multi-evaluation trading. And we like to think that we're a part of increasing the awareness of doing that out there, because it's a really great thing. So this does work if you trade on a DOM or Dome, depending on how you want to say it. It also works if you just do chart trading. If you just like to move lines up and down on a regular old horizontal chart, it will work just fine there as well. And it is really quite flexible. There's a lot of cool flexibility in how you can set it up to trade multiple different things. Different charts can have, a master chart can have its own sub copy charts, and a different master chart can have its own. And, there's a lot of cool stuff you can do. And as Lee mentioned, you can have multiple installs of Sierra, each one preset and configured to a different evaluator. I do the exact same thing. So I have my Lulu copy and my Apex copy and my, whoever copy. And that makes it really easy as well to just switch back and forth between evaluators. So with that, let's go ahead and start jumping into showing you how to use this thing. There are, however, some things you're going to want to be aware of, for sure. Enabling the copier in the first place. The feature in its most basic form has actually been there for quite some time. I don't really know. Do you know, Lee, offhand, how long ago it first appeared in Sierra?
Yeah, a year, maybe 18 months. I'm not sure when I first stumbled across it.
Yeah, but it was there. It's been there a long time, but I'd never heard anybody mention it. I never knew it was there. Lee hadn't known it was there. And we all was, scratching our heads a little bit going, what the heck is this? And then started to play around with it and realize, oh my God, there's a copier built into here. What? Why did we not know about this? But then we discovered, well, we don't know about it because it barely does anything. But that's changing. So to enable it, let's just start there. Actually, you know what? Let's not start there. Here's what I'm going to start with. I'm going to start by first. Hello. Okay, let's see. I mean to do that. There we go. There's my platform. So not everybody may be familiar with what I'm even talking about when I say trade copier. So let me just really quick show you before I explain the how, but the what. Here is what it does. Obviously, it's Saturday, market's closed, but let's just imagine the market was open right now. If I place an order somewhere, like say I click on my dome here, this is my master chart on the left, and this is 5 copies or 4 copies. Sorry, 4 copies on the right, master on the left, 5 total charts. And then say I were to say, wow, after this push up, I definitely want to buy down here. Place an order here, and look at that, boom, 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 boom. Orders placed everywhere. If I move this order, and actually before I do that, this is the state that this feature was in up to about a week ago. This is all it did. It could place an order. That is it. And it would replicate that order across. And if I were to say, okay, now I want to, if I want to sell, I want to sell it here. And there we go. Boom, 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 boom. And that was all it did. If I moved one of these orders, these did not move. They didn't update. Any updates to the master did not ripple across. And so it was just literally your initial entry order. So if you wanted to move an order, what you had to do was click cancel and then replace and cancel and replace. And it was very clunky and tedious and frankly easy to make a mistake, easy to forget and move an order. And then all of a sudden your order's out of sync and it was a mess. But what I noticed the other day was this: if I move this order, they all move. This was the game changer that made me say, oh my God, we need to tell people about this, because Sierra hadn't said anything about this feature being there yet. And now it's just great. And, these are real orders. These are not visualization markers that are saying, oh yeah, if we get down here, we'll get a market order. No, these are actual orders. In this case, it's a limit order. You can see the L there, L, 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 L. These are actual limit orders. And up here, same thing. Whoops. No. Oh my God, I entered. Oh no. So if I move the order, they all move, and they are actual orders. So they are, if this was, especially if it was a cash account or cash accounts, live market, whatever, then I'm going to be reserving my spot in line, the queue position, all that. I'm going to talk more about queue position in a little bit as well. But it's an important thing to note that these are actual orders placed. So that's in a nutshell what it does in simplified form. It is an order Copier. So it copies my orders across, but now I can move my orders and they will all stay in lockstep.
And JVC, this visual is excellent on the charts, but also for anyone that hasn't noticed, at the bottom left of your screen, we've got the trade order list in Sierra chart, and you can see how the orders are populating in that window and disappearing, or if we had the price visible, the price column, as you moved it, you would see it update within that window.
And topic, I'll do it right now. For those who don't know, this window, especially when you're dealing with copying, you're going to want to have this somewhere. This is really important because it is so easy to accidentally end up with stray orders floating around if you do something that you probably shouldn't have done. For example, if I were to, cancel an order on one of the copies, well, that's a copy. It doesn't cancel anywhere else. So for example, what I like to do is my copies, they literally aren't even on the same screen. I've got them on a separate monitor. They're tiny, they're little, they're shrunk down real small, and they're just there so I can kind of glance over and make sure everybody's behaving and I see everything kind of looks like it is, but I'm not going to go over there and screw with anything. I'm not going to touch anything. I don't want to have this situation happen. And then you get just all kinds of messed up. So this is a really useful window. You get to it through the trade menu and then trade orders window. And this is also a really good sanity check at the end of your day or the end of a trading session or whatever, is just to make sure this is empty. And if it's not, just hit cancel all. And it's always going to ask you, do you really want to do that? Yes. Okay, fine. Great. Now I know for a fact. I don't even have to look up here at any of my charts or anything like that. I know for a fact I have no orders anywhere. That's it. I'm flat out. Everything's cool. Same thing with the positions. Same exact thing. Trade positions window. Double check both of these. Give them a quick sanity check before you walk away from your platform. At the end of the day, end of a session, to go take a bathroom break, go have lunch, whatever. Double check this. And if you expect to have orders or positions in, then fine, make sure they're there. But if you think you're flat, check. Don't assume. I'm sure most of us have probably been bit at some point by leaving an order or a position on that we didn't realiise.
And what I do as well, I have our trader open if I'm using a Rhythmic account, and I double check on Rhythmic as well.
That's a really good point. Yep, because it is possible. I've only ever had this happen one time, and it was actually just the other day. But I've certainly heard about it from plenty of other people where something can happen between the connection from Sierra Chart and Rhythmic, and they can get confused, out of sync, and you can end up looking at Sierra. And this is what happened to me: is I looked in Sierra and it was flat, but something didn't feel right. And I went and I forget what it was I saw, but something looked quirky. And I went and checked Rhythmic, and sure enough, there was still something there. And so I had to flatten from within Rhythmic, and it freaked me out a little bit. It didn't cause me any particular harm, thankfully, but it was the first time that had actually happened to me, despite people saying, "Oh my God, this happens." It's like, "Yeah, really? Come on, you must have done something wrong." And no, it just every once in a while it can happen. So yeah, sanity check Rhythmic as well. It's a really good habit. So let's see. Let's get back into this. Oh, yeah, it's over here. Duh. I forgot where I tucked it. There we go. So some things you're going to want to know about. Enabling it, not entirely intuitive, as I mentioned. So you know what? Actually, let me just start there. Here's what I'm going to do. Now that this was just for demonstration purposes, I'm going to just go ahead and delete all of these, and we're going to start from scratch. And I'm going to go ahead and just duplicate this so it's fresh. Close this up. All right. So what we have here is a very bog standard chart. Only thing I've done is I've changed it to candles because looking at a bar chart was going to make me ill. I've turned on the chart dome just so that I can place orders, and that's basically it. In fact, let's go ahead and start a replay. Let's do a replay of yesterday. I can just have this running. We'll start at the open, so we'll do 8:30 and single chart. No, actually, I want. Actually, if I add charts midway through a replay, it's not going to pick them up, is it, Lee?
I suspect it won't. It's not something I've ever tried.
Yeah, I've never tried it either, actually, come to think of it. Yeah, you know what? It doesn't even matter. I don't need to even have data flowing. It makes no difference, really, for this.
You'll need to change the date to yesterday, JVC.
Did I not just do that? Yes, I did not just do that. Okay, I changed the time. That's right.
I'm thinking, do you want to explain to people as well the SIM account and the multiple SIM accounts that you're using to get this set up?
Yep, exactly. So I am using the local Sierra Chart sim right now, just again, because markets aren't running anyway, and it's just easy. But you can do this with the Sierra Chart simulated futures trading service, which I'm a big fan of for sim. I rarely, in fact, ever use the local sim like this unless I'm just, developing something, working on a spreadsheet system, or playing around, screwing around with studies and experimenting, whatever. I like the fact that the Sierra Futures Sim Trading Service is on a remote server in Chicago. And so it's doing about the best job it can of simulating the process of placing an order, having it route to the CME and come back and all that. And I like that very much. But for this, we're going to do that. What I've got is, of course, all the 10 SIM accounts that Sierra comes default set up with. Of course, you can have more if you want them, but 10 is more than enough for this. And this is my master. It's Sim 1. All I've done to this chart, oh, yes, that's right, the new Sierra chart dialogues, which I'm still not used to seeing. All I've really done in here is set the session times, which are over here. I've set the session times and, again, changed it to candlesticks. And that's really it. There's nothing else here. So to use the copier, the first thing you're going to do is have some copies, right? So what I'm going to do is I'm going to go ahead and just create a duplicate again. And I'm using my hotkeys because I'm a hotkey junkie, but technically that was chart, duplicate chart, which I have mapped to Control-Shift-D. So I can just quickly make copies anytime. And on the copy, I'm actually going to get rid of, you know what? No, I'm going to leave, on this one, I'm going to leave a dome because I'm going to show something in a minute. But we'll just go ahead and start here. And because I am anal retentive, it won't. Really? Window grid, you suck. All right, I'm going to do this, and then I'm going to do that. All right, great. So there's my first trade copy, or my first copy account, and I want to change it, of course, to a different account. This is important. Make sure you change these, or you're going to end up with all of them being on the same account, and you're going to get all kinds of confused. So I'm going to make this Sim2, and I'm just going to go ahead and duplicate it again. I'll move it over here. And for this, I am going to turn off the chart dome because I won't need to see it anymore. There we go. And I'm going to duplicate this again, move it over here, and I'm going to duplicate this again and move it over here. So now I've got my 4 copies. And just put it right there and do that. There we go. I've got my 4 copies and my master. But right now, nothing is linked. If I throw an order on here, of course, they have nothing to do with each other. So same thing if I throw an order here. Now, that was unexpected.
They're all on Sim 2, JVC.
Oh, I just got bit by what I just said. They're all still on Sim 2. See, this is exactly what I said. First thing you should do is change the account. Otherwise, that is exactly what will happen. Thank you for catching that, Lee. So Sim 3, Sim 4, Sim 5. Much better. Okay, so follow my own advice. There we go. Now, of course, if I place an order here, of course, just by itself, has nothing to do with anything. No copies are enabled. So what I need to do to enable it, this is where we get into the kind of unintuitive part, because you have to go digging. You have to know where to dig. And this is why we didn't even find out about the existence of this feature for who knows how long it had been there. But on your master chart, okay, go into menu, go down to settings, and go over to order allocation to trade accounts. All right. And now the new dialog makes it even less clear and intuitive what you're supposed to do. Here's what you have to do. First, you have to add some accounts from the available accounts list. Right? They're so nice. They tell you it's a list. That means if you click on this, you get a drop down. In that drop down are all the possible SIM accounts, same as they were over here in the trade window. So this is the master. So I'm not going to copy to Sim 1, right? That wouldn't make any sense, but I want Sim 2. And then this little word add here in brackets means it's a button. So if I click it over here, we see order allocation accounts list. This list contains the accounts that I've actually added. So this list up here is all possible available accounts. This list down here is just the accounts that have actually been added to be connected to this master account. So I'm going to add Sim 3, add. Now you see Sim 3 appears there. Sim 4. Add.
JVC, before you do the final one, Dominic asked about the multiplication factors. So why don't we set one of them up to actually do a different quantity as well?
Sure. That's a good point. I don't use this feature, but it is there if you want it. And then an interesting use of this might be maybe your master, you're trading a mini, but you want your copies to be trading micros and you want to do a 2-lot or a 4-lot. Or something like that. You want to do a fraction of a mini.
Or maybe you're trading 25 and 50K evaluations.
That's a good point.
And so you'd set your master to the smaller one, and then have your slaves as the larger one, and double up the size of the position you're trading, for example.
That's a really good point. I'm in the habit of whenever I grab multiple evaluations, I do them all the same size. But that's a really good point. You could do a few 25s and a 50, or and 100 or whatever, and the multiplication factor might be useful there. So I'm going to set this to say a 5 lot, and now I'm going to go ahead and add number 5. That's right. And add. There we go. And now, actually, so I've never used this feature. Okay, I changed it for number 4, actually. So let's put that back to 1. And if I go to 5 and change it to a 5 lot. Now, if I change to 4, it should be back to 1. Yeah, okay, cool. I'm
loving this new dialog box style.
Isn't it beautiful? The artistry is just phenomenal.
I think in the next version, they'll actually make you create a punched card, and you'll put that in your computer to generate the settings.
So tactile. I love it. Oh. Anyway, we love to pick on Sierra Chart, but it is great. Just got to overlook a few quirks. Anyway, so now I've got my copies set up, but watch, if I come back here and I place an order, what happened? Why did it not work? Well, because that's not the only place you have to do something. You also have to, before you okay that dialog, you have to order allocation to trade accounts enabled. Double click that. It becomes a yes. Hit OK. And now, lo and behold, we have copies. And I can just move the master around, whatever, and everything works. Now, also, take a look over here. We've got a 1 lot, a 1 lot, a 1 lot, a 1 lot, and a 5 lot. So the multiplier is happily multiplying. That is actually really cool. Glad I know about that now. So that's how you turn it on. Very clunky and cumbersome, but once you know it's there, not a big deal. And of course it saves with your chart book. So, once you save it, you reopen the same chart book, your copier is just good to go. I always do a sanity check each time just to make sure the accounts haven't changed, because sometimes I've noticed that the accounts get shuffled and they get reset back to the default and they're all in the same account. There's a few oddities that I don't know for sure related to the copier. It could be something else, but it's just always a good idea to do a pre-flight check when you fire up especially a copied chart book, that all your copies are set to the same lot size you want and the count you want and all that. Just always don't assume. Don't assume. It will bite you at some point if you do. All right. So next thing to be aware of, no brackets on the master. Do not use brackets, with a possible caveat if you really must. And here's the reason why. I'm going to go ahead and say use attached orders here. And my bracket is just a 10 tick on both sides. Right now, notice I don't have use attached orders enabled for any of the copies. Okay. But if I place an order down here, there it is. And let me just zoom in a little bit so we can see it better. So if I move it, it's fine. Everything's cool, right? So what's wrong with brackets? Why not use them? And actually, before I get to why not use them, so this was my point about use attached orders is not checked in any of the copies, but they got the bracket because they inherit all orders from the master. So you don't want to enable it on the copies. You only need to enable it in the master. But here's why do not use brackets with this. If you move the target with your bracket, they do not reflect. But now if I move the master order, they move. So you can really easily get yourself completely screwed up with targets and stops in totally the wrong place and not realize it if you assume that those are copying across as well. They don't. So if you know this and you really want to be able to individually for each chart, which maybe you do. I could think of a scenario where you might be doing different strategies with different copied accounts. And yeah, your entry is the same, but you're trying different profit taking, risk management. I don't know. There's scenarios maybe you'd want to do this, but you need to be aware that you'll have to manage them completely independently, but they will still follow the master order. So in general, I'd just say don't use brackets with copies. You're just asking for trouble.
So JVC, is there a change in behavior? You may not know this. On what you had right there was the master order was a working order.
Yes.
And the brackets will obviously get into the market once the master order has filled.
Correct.
Now, is there no movement whatsoever of the brackets even once the master order has filled?
Oh, after a fill. You know what? I don't know that because I've never used a bracket in the copier. But let's try something.
And I don't use a bracket in the copier either, because I tried and it wasn't doing what I wanted. So I stopped using brackets, full stop. But once we've got a fill, let's find out.
Yep. Here's the answer. We have a fill, nada. And it's exactly what I expected. So it's consistent at least, but you better know this, because if you have a bracket on, even accidentally, you could get really messed up. So
this is all about order entry, not order modification.
That is correct. Now that they have said that that's coming, they have plans to make basically everything you do on the master be able to replicate across the copies. And there's a lot of additional features set that's supposed to be coming at some point. But, Sierra is, of course, never going to commit to any sort of timetable or tell you anything about when exactly or how or what or anything. It's just we're working on adding more stuff. So know that. Let's see now. Okay,
JP's just asked if you put manual target stops, they move in sync. No, movement is not synchronized. Entry is synchronized.
Well, okay, let's clarify exactly what you mean, because if you mean this, I want to whoops.
Yeah.
You see where I'm going. So if you mean this, I place a buy and entry order down here, and then let's say let's fill it. Okay, great, I'm filled. And now I say, okay, I want to exit up here. That is a standalone order. Right? So I can move it and no problem. It'll copy just fine. And this is in fact how I do it. This is what I do for quote unquote brackets. They're not brackets, but functionally for taking profits and managing risks. If I want to put a stop down, whoops, not a buy stop. Hello. I want to put a stop down here. Same thing. I can put a stop down here, profit take above, and no problem, but they're not a bracket. So just be aware of that when this fills, if I get my profit, this will still be there. Unless, and I'm going to get to this, there is a feature that can handle that for you. So there you go. All right. Now, next this is an important distinction. This is why I kind of mentioned earlier about how these are real orders. They're not markers, placeholders, waiting for something to happen on the master, and then they're going to, react. These are actual orders in the market or the sim or, whatever you're using. There are other copiers out there that wait for the master to get a fill. And when the master fills, then they do a market order on the copies. But I'm sure if any of you have ever used market orders before, especially in a quick moving market, you can imagine how that could really get ugly. You could run into a lot of problems, slippage and things not aligning if you just wait for your master to fill. And then after that, go in on a master go in at market rather on the copies.
But this is no problem, because the people who are using these sort of copiers are trading off their candlestick charts with 10-point stops and 20-point targets.
And they'll never get stop hit.
So the slippage doesn't matter.
Right. So, if you got filled in your master, say you got filled on a sweep, say you're doing this in CL, right? If any of you trade oil, you know how oil can just tear your face and head and body apart. And you get filled in a 20 tick sweep in your master, and maybe you get filled with only a couple ticks slippage, but now your copies end up with 14, 15 ticks of slippage. It can be a real mess. So this does not suffer from that, because when I place, an order somewhere, it's an order. It's actually sitting there waiting to get filled. And when the master fills, this will separately fill, this will separately fill, this, they're completely independent. They're just manipulated, modified by what you do on the master in terms of price position, but they are actual limit orders or stop orders or, whatever sitting in the market. Whoops, I keep hitting the wrong thing. There we go. Let's see now here's a real important one to note. Obviously most of us are probably talking about doing this in evaluations with Rhythmic. And if your external risk manager, i.e. Rhythmic for our discussion, if it gets you flat because you've hit your liquidation threshold or your arbitrary daily loss limit or whatever, the copies don't necessarily flatten. Now, if every account was in perfect lockstep and you blow up the master, well, then the children, the copies are going to blow up too. In which case, they're going to get flat because you just blew everything up. But if you've got your risk manager and Rhythmic set to a $300 a day max drawdown and then get you flat, well, the master will get flat. The copies will not. So, be aware of that and watch out for that. That actually.
And let's just explore that a little bit, because it's because another program has actually triggered that event happening.
Correct.
It's, this is order replication being dealt with by Sierra Chart. And if our Trader Pro is being used to change orders, flatten, whatever, the order entry is happening externally. So, of course, it's not going to be synchronized. So you've got to be really strict about understanding, I know what is duplicating my work. And if I want things to roll through, I've got to initiate everything that I want replicated within Sierra Chart.
Exactly right. It makes perfect sense once you think it through and you understand all the different pieces, the moving parts here. But the first time it happens, if you don't understand the moving parts, you might not notice, in which case you think, oh, well, no problem, I'm flat. And nope, your copies are not flat. Or you just start scratching your head and freaking out and wondering, oh my God, what's going on? It definitely can catch you, on the wrong foot. Additionally, there are two different flatten options within Sierra Chart. There is and you can set these in the hotkeys if you're into hotkeys the way I am. There's flatten and cancel all accounts, which seems really useful, right? Flatten and cancel all accounts. Well, I'm trading multiple accounts. That's perfect. That's exactly what I want. But much to the bane of Lee's existence, it will always give you the confirmation pop-up. Are you sure you want to flatten this? Whatever. And so if you're trading 20 accounts, you're going to get 20 stupid confirmation pop-ups. However, in my experience, and Lee, it's interesting. You seem to have had a slightly different experience here. I'm not quite sure. Maybe I just misunderstood. But for me, anyway, I have always found that the plain flatten button, this one right here, if I hit flatten here, in fact, I'll do it right now. I'll just put an order here and an order up here, and I'll buy the market. Ooh. And if I hit flatten, boom, everything's gone. And that's how it's
and I know why. There's a few reasons why I, in the TRG live sessions, have come across this. One is that I'm not on this 2371 release yet. Two is I've created my own custom toolbar to save space, and I think my flatten button is probably the shortcut to flatten and cancel all accounts.
All accounts, exactly, which is logical why you would have chosen that, because multiple accounts. That's what I want. But yeah, it has that unintended gotcha.
And I built the toolbar before I really got into this order allocation, so I need to rebuild that toolbar.
Yeah, exactly. And also, it's worth noting that there are some options around this. One is, where is it? Well, first of all, confirmations. Of course, if you don't have these turned off already, go into Menu, Confirmations, and uncheck all of these. If you don't want to have to be asked, are you sure you want to do that? Are you sure you're going to do that for every single account? So I always make sure that those are turned off. There's also a setting. I have a bullet about this, I think, later in the slides, but I'll just mention it now since we're on it. For oh gosh, where is it? It's under orders. That's right. Cancel orders on flat position. So that can be handy as long as you're sure you understand what you want. If you really truly want to make sure that when I get flat, I want a clean slate, I don't want there to be any orders floating out there anywhere whatsoever, then you can enable that, and that's what you'll get. Every single time you get flat, all your orders will go away. But if part of your approach to trading is, yes, right now I'm focusing on this one trade and I want that trade to get flat, but I've got some other possible entry spots elsewhere that I'm stalking and I want those orders sitting there, you're not going to want to use this feature because it will cancel them every single time your current trade gets flat. So worth knowing that. Okie doke. Let's see. Where was I? Yes. Confirmation pop-ups. Right. Now, flatten button master. Yes. Here. Okay. Also, if you want to get flat, you've got to have open orders or positions on your master. To illustrate what I mean there, let's just say let me think about what's the best way to illustrate this. Well, actually, let's just do this. So let's just say I had a straight order floating out here somehow. And I realized like, oh, wait a minute. I don't know what happened, but I have a straight order out there. Okay, I'm going to go ahead and hit flat. It's not canceling what? Cancel, flat. What am I doing? It's not going to have any effect because all this does is handle orders on this chart. Once that order is handled, then that command, gets passed out to everyone else. So what I would have to do, well, obviously I could just hit cancel here, right? That's the easiest solutions. If you've got quick access to your charts, this is why I want to have them kind of handy nearby. And I do have chart trading enabled for them exactly so I can do that if I ever need to. But I don't want them front and center in my face like I have them in this demonstration workbook. But if you want to use the master now to cancel, what you have to do is, and I've done this before, is I'll throw an order on like way off the price somewhere. It doesn't even matter where it is. And now if I hit flatten or cancel, either one, since none of these are trades, if I hit flatten, it goes away because it was successfully able to remove an order from here. The flatten command was processed, and then it gets sent out to all of the copy accounts, and then we're good. So watch out for that. If you have if you don't have any orders or positions, orders or positions, you have nothing at all on your master chart, it will not do anything to the copies, no matter what. So just be aware and watch out for that. Okay, now let's see here. Your fills, we talked about this a little already. They're at the mercy of the market, right? Once the order is placed in the master, the actual fill is going to depend on the market. You can always, and will sometimes see slight variations between the master and the copies, specifically in a live cash account. If you've got a brokerage that allows you to have multiple accounts under one account, sub accounts, whatever they want to call it. And if that is supported within Sierra Chart, and I've never done this actually in cash accounts, so I don't know what live brokers support this multiple account thing under the same dropdown. But if you are using one that does, whoops, I just hit totally the wrong thing. Let's get back over here. There we go. If you are in a live broker situation and you've got several accounts here, then you're going to have, by definition, some slippage, right? Because let's say your master let's say you're the only one in the market. You are the market, and your master account is in queue position 1. Well, then this copy, it can't be in queue position 1. It's going to be in queue position 2, queue position 3, queue position 4, queue position 5, etc. You're by definition not going to have the same queue position, which means you could get filled on this one and not the copies, or you could get filled on this one and 2 of the copies and not the last 2 copies. It's just a fact of life because you can't be you can't be in 2 places at the same time, and 2 things can't be in the same place at the same time. So you can't have 2 different accounts in the same queue position in the market. However, here's where things get interesting. This is not true with evaluation accounts.
I think Jan has asked a question. So let's just throw Jan's question here as well. So when you use 20 Lilu accounts in live sim, so that's you've passed the evaluation. You're working to get money. And you're still on the paper trading server. Does this generate slippage, or do they not see that because it's on different accounts? So saying, can you trick the live sim with 35 by 20 contracts and get no slippage? Well, can you abuse the sim? Yeah. Can you get paid from abusing the sim? No.
Yeah, not if they realize what you're doing. Which if you're mass scalping, one ticks to take advantage of this, they absolutely will see that. This is why Top Step started trying to implement all these silly rules about 20 seconds and no more than X number of contracts traded a day, and whatever other silly rules that they keep trying to implement. Is because people woke up to this and tried to take advantage of it.
Oh, and they were going for unrealistic fills, having algos throwing literally thousands of trades in short periods of time to abuse the sim. And, that I get. If you're using this in a realistic way, if you are trading in a way that you would be trading your cash accounts, then non-issue.
Yep. And the reason why this is so interesting is because what this means is that every order, if I click that, every one of these orders, if we were in live markets right now, or if the markets were open, let me rephrase that, would have the same queue position. Or I suppose technically it's possible.
No, they'd be behind each other.
No, I get the same position. That's what's so interesting. I get the same queue position.
If that's estimated position.
Well, you're right. I'm sorry. It's estimated. You're right. Maybe that's what I'm seeing is I'm seeing it showing me, your estimated position is you're number 6, and I'm number 6 in all of them. But yeah, behind the scenes, maybe they're at the
exchange, they're going to be stacked up behind each other, and there might be others in between anyway.
Even at paper?
Oh, sorry, not on paper.
I'm not talking cash. Yeah.
Right.
Yeah. Cash, they will absolutely. Yes. This is what I was talking about. Cash, they will never be the same queue position. They can't by definition. It's of course. But in the evals, you get the same queue position because there is no market. It's fake. It's a game. So what this means is that if your master fills, you're good. Your copies are going to fill. which is very, very interesting and opens up a bunch of fun things that you can do that are, not a blatant abuse of their sim. You don't want to be doing that, but it definitely is an edge if you're playing the game of take advantage of the evaluators, beat them at their own game, stack the odds in your favor, get every edge you possibly can. And this is one additional one. So we'll go into that a bit more later when Lee starts to talk about the nuances of how exactly we do this stuff.
And really, to close off Jan's question, the paper trading server at Rhythmic Sim, the server-side sim, it is never going to be considering simulated orders going in. It's basically saying your simulated order is here, position number 200 in the queue. So if 200 lots trade at that price, you're going to get filled. That's how it's working. But those lots have to trade in the real market. It's looking at real market to assess your simulated fill.
Yep, which is why, it's obviously not Rhythmic because they've got caps, but if there was no cap on the number of contracts you were allowed to trade, you could trade a 10,000 lot. It wouldn't know or care other than in order to fill an order on a 10,000 lot, then, that many contracts would have to trade and you'd have a hard time with that. This is a very interesting piece of this. Now, slippage can affect accounts differently. I kind of mentioned this already. You can have the master slip and, the master might not slip, but the copies do. Put that in the right way. That your master might fill exactly right. But if you, again, the CL example, if you got filled on a ridiculous sweep, it is possible for things not to line up in a cash market. In fact, possible nothing. It's highly likely you're going to get variances. But in the evaluations anyway, I find that to be exceedingly unusual. You get the same fill and everything stays in very lockstep, especially if you're trading, quote unquote, sensibly and you're using structural price levels to lean on and all the kinds of stuff that we talk about all the time in TRG.
If you're entering at market, you might find you're off by a tick in some of them.
Yes. Yeah, that can always happen in market orders. But, if you're using limits to get in at sensible spots and get out at sensible spots and things, especially get out, you will find that you really don't get any. So this, as we kind of already talked about this, as there were questions up front, this does not support trading across different brokers and evaluators. So you can't have your master at Apex trading 5 copies at Apex and also trading 5 more copies at Lilu. You can't do that. And the same thing with, you can't have your master at AMP and your copies at Iron Beam or whatever. So it's definitely only within one evaluator at a time. But as we mentioned, you definitely can have multiple copies of Sierra Chart configured for different evaluators. And you got multiple monitors, or you got a really, really big ultra wide monitor or something with room for multiple copies of your platform simultaneously. No problem. You can have, one screen with Lilu on it, another screen with Apex on it, another screen with UProfit on it, whatever. And you can absolutely do that and just place your orders in one master for each one. And that becomes feasible. And you might have 5 or 10 accounts in each one. And it sounds insane, you're managing that many accounts, but actually you're only managing 2 or 3. Your main domes. That's it. It's actually very feasible. But above all, last but not least, this requires really solid trading skills. This is not a safe thing if you're new to trading, because obviously, it should be obvious anyway, this is going to multiply profits and losses. So I really strongly do not recommend any newer traders or any trader who has not yet even been able to pass a single evaluation to mess with a copier. Just don't. This is not a magic bullet. This is not going to suddenly pass you things. If you can't pass 1, you're not going to pass 20. It's just simple. So
yeah, if you can't pass 1, don't fail 20.
Yeah, exactly right. That's exactly right. So you learn first, then earn. That's the way to do it. So all right, let's start talking a little bit about the Sierra Chart orders. And this is specific to brackets, but it's worth understanding whether you're going to use brackets or not in a copier. It's still really important to understand the different types of orders. Sierra has got parent orders and child orders. Okay, that's one of the basic concepts of their order types. And your parent order is the actual order that's going to initiate a trade. Your parent order is the order that's going to get me long, get me short, whatever, get me out, whatever it is, that's a parent order. It will go live. Oh, sorry. And child orders are the orders that are attached to the parent. They don't do anything until the parent fills. They're not even actually there. It can visually be easy to get yourself mixed up if you've got a lot of these things scattered around your chart. If I've got, actually I need to turn on brackets. If I'm using brackets and I've got, a bracket here and I've got, another one, a cell bracket up here and I got that going on. And, maybe I've got a scalp here, when you've got something like this going on, it becomes kind of a fustercluck of trying to figure out what am I looking at, which ones belongs to what, and it can be really easy to lose yourself.
There is a feature with connection lines, isn't there?
There is. The connection lines, I've always found them, unfortunately, either you make them thin enough so that they're not distracting, but then they're so thin you don't really see them unless you get real close and try to figure it out, or you thicken them up, but then they're really distracting. And there's all these little dotted lines off to the left and they overlap and crisscross. And you can't, what I wish Sierra would do, and I think I even made this feature suggestion on the support board a long time ago, but yeah, I'm sure you can imagine how well that was received, is each order gets a different color connection line. That seems simple, but it doesn't do that. They're all the same one color. So you just end up with a bunch of lines over here that all overlap and crisscross and you're stuck right where you were anyway.
What I like about this JVC is it's really clear that price has broken through the orange pivot point and is on its way to R2.
Oh, clearly. This orange pivot point, right? oh, no, you mean this one. Oh, wait.
Something over.
So, yeah, but, notice here that if the market was open right now, and in fact, let me just get rid of all this crap. Let's say, I had a bracket here and, something like that. If the market were moving up and it moved through this orange one, nothing's going to happen because this orange one is a child order. It's not even in the market. It doesn't exist. It's just on my platform to tell me this is where an order will be if my parent fills. Same thing up here. This one, it's not in the market. It's a child order and they are attached, right? So, oops, of course, I just went long. Not what I meant to do. Let's try this down here. So, parent and child, if I move the parent, the children move. But if I move the child, the parent does not follow. It's a bad parent. Doesn't monitor its children, doesn't stay nearby. Shame on it. But that's the difference between parent orders and child orders. And Sierra chart terminology uses those quite often. And brackets, of course, are going to be by far the most common way that most of us probably have parent or child orders. Of course, if you cancel a working parent order, not a position, not flattening a position necessarily, but cancel a working order, then obviously the children go away, as they should. Now, it is, however, possible with a bracket that you can end up getting flat, but you didn't necessarily cancel the child orders. This is not obvious on why this would happen, but there is, whoops, I'm in the wrong thing. Where'd you go? There we go. There is an option feature within Sierra chart for scale in or scale out. I have it on a custom toolbar here. I don't even remember what menu it's in here, actually. God, it's been so long since I've done it from a menu. I don't remember where it is, but anyway, there's a feature somewhere for scale in, scale out. It's probably in the chart menu. And if I have both of these turned off, okay, now if let's just do this. Let's say I buy market and there we go. And let's say, we're trading around, but I've changed my mind. I want to get out of this trade. If I now sell market, oops. What happened? Well, because it didn't cancel the child orders. But if let's cancel all. If I am set to scale out and I do the same thing, let's go buy market. And now if I sell market, they go away. So it's a subtle thing, but it's worth knowing if you've ever found yourself in the situation. Whoops. There we go. If you've ever found yourself in that situation. If you've ever had that happen and then you're suddenly got all these stray brackets floating around without a trade and you're going, oh my God, because now these are actual orders. And if market gets up here, it's going to buy here and it's going to sell there. And everything's going to just fall apart. If you've ever found yourself in that situation, it's worth understanding that you'll want to be in scale out. And then that will prevent that from happening. You also, of course, this is where this feature comes in also, which is the orders, cancel orders on flat position. This is a time where you might want that. If you don't want to be on scale out or just didn't know you need to be and don't care. Now, if I sell the market here, as soon as I get flat, they go away. But notice what happened. My copies did not. So again, this is an area with the copier, you can get bit quite hard because now, this is what I showed earlier. If I try to flatten, won't work. Cancel, doesn't work. Oh my God, what do I do? I got to cancel each one of these separately, whatever. Or I can throw an order up here and then cancel all, and then it takes care of it. So worth knowing about how that can happen, especially when you're working with brackets. You can end up with stray orders that can really be ugly. And that's, you can set Sierra chart to always cancel working orders once flat, which I just showed. So let's talk about risk management. There is an option within Sierra chart under the trade menu called global profit loss management. Sounds great. All right, let's check that out. Let's go trade, global profit loss management. Oh, look at all these nifty features. Well, not so fast. First, make sure that you RTFM. If you don't know what that stands for, the short version is read the manual. All you really got to do to read the manual, quite frankly, is to go to Google and Google Sierra chart global profit loss management. And it's the first result. And there's some really nice documentation here. Quite thorough, very standard Sierra chart documentation fare. It's very dry. It's good reference material. Wouldn't recommend it for recreational reading, but you want to know what each one of these features does and is and whatever. It's all in here. However, here's the big gotcha. 3 separate passages I snipped from that document about why you should not use this. Literally. The functionality which is documented on this page is not recommended to be used. This is Sierra chart saying this. This feature has no guarantee it will work as expected. It is recommended this feature not be used. We will not provide technical support for malfunctions. Have they made themselves clear? They do not want you using this feature. It was developed in response to user requests, but it cannot work reliably on the client side. At this point, if you continue to use this, well, good luck to you. You really need to manage yourself. It's all about that. If you do not work on the discipline of being able to get out of a trade that is wrong, take profits when it is sensible to do so. Do not even attempt to rely on platform to do this for you. It's just a bad idea. Now, that being said, I'm attracted to the idea of having a platform, monitor me and try to babysit me a little bit. I will admit, given up on using this thing. But I did spend many an hour in a trading day trying to make this work for me. And I want to love it so bad. But with those admonishments from Sierra chart about all the different reasons why you absolutely positively should not use this, and they don't want you to use it and it won't work and it doesn't work, I'm done. I don't use this thing anymore. But if you want to explore it, here are some of the things that it can do. So first thing is flatten your positions when a profit rule is met, right? And there are 2 different items. It's this checkbox here, flatten positions when profit rule is met. And if that's enabled, then these 2 items here come into play. You have your trigger value, which is I consider to be cocking the hammer. If you've ever used a hammer action gun or seen a Western or anything like that, they cock that hammer back. It's not firing yet. That's just the level the profit amount at which to get ready. It triggers it, and triggers the bad word here because I'm using a gun analogy, but it puts it into a ready state. It says, okay, you've made $300 of profit. We are now watching your profit. If after you have made $300 profit, your profit drops to this amount, the profit value after trigger to flatten positions, mouthful, then I will get you flat. So you've got cocking the hammer, which is your initial profit trigger value, and then pulling the trigger is whatever level you want to fall to. It could be 300. So basically, this is a way to keep you from letting all your profits vaporize. You might set it to 1,000. This could be $1,000 and this could be 500. And you figure, okay, I don't want to give back more than half of my gains, worst case, no matter what happens. And so then that's what would happen. It would get you flat. This by itself doesn't keep you from then continuing to trade. So again, discipline, your own discipline as a trader is necessary. You could just continue to trade and blow through that remaining 500, but it will at least flatten you after this profit value has been reached. And then you dip, you get a drawdown to that level. So that's the first way you can use it. The next is you can have it trail your daily net profit, which sounds so cool. In practice, I've found that it never ends up doing what I would have wanted it to do in the moment. It can't read your mind, but it trails whatever the after trigger value is above by X amount, every increase of Y amount, which probably is totally cryptic and makes no sense. So let's just illustrate it here. It's this option here, trail daily net profit. If I enable that, it works in conjunction with this feature. Notice that all of this stuff is within this one box. See the little thin line there? Because this is all part of daily net profit management. So these features are related. So you have to have this feature enabled, and then you have a trigger value. Now, this here ignores this. This is separate from this. This would still be in play. Let's say I set this to 100. So if I've made 300 in profit and it drops to 100, I'm flat. But I've also set this to say, well, every additional $100 increase the flat value by $25. What that means is that once I've hit 300, if I then, without hitting 100, I don't draw down to 100, I keep going up. If I go up to 400, which is $100 more, then this takes effect. And now this value here becomes this plus that. So this becomes 125. Now I'm at 400. If I hit 125, I'm out. Let's say I go up another 100. I'm at 500. This will go to 150. I go to 600. This will go to 175. 700. This will go to 200. You see what I mean? So it will just, as your profits increase, it will just trail up by this amount. Which again, it sounds super, super useful. In practice, I just always find it ends up doing just the wrong thing at the wrong time. But it's there if you really want to use it, despite Sierra Chart warning you on pain of death not to. The third option, and quite possibly the one most people need more than anything, is to lock your account after your positions are flattened, because you don't have the self-control to freaking stop trading, right? And you can lock for the day, or you can lock for N minutes, whatever N is, up to you. And that is over here, lock trading, right? And you can say, okay, well, after I'm flattened, and this is not after you flatten, by the way, this has nothing to do with you manually hitting flatten. This is after the platform rules here get you flat. So this doesn't do anything, this lock after positions flattened, unless you're also using either flatten when profit rules are met, or flatten when loss rules are met, which I'm going to talk about in just a minute. But if you've got one of those two enabled, then after either one of those gets you flat, if you have this enabled, lock after positions flattened, then you will not be allowed to trade anymore in that account. Now, there's a couple of options here. You can lock for X number of minutes, in this case 5, or you can say, nope, lock me out for the day. I'm done. I cannot trade anymore. Obviously, this is your platform. You can override this. Again, discipline. This is why I say ultimately don't rely on this stuff. Just develop the discipline. Because if you rely on this stuff at some point, guaranteed, you are going to end up knowing better than the platform. And you're going to come in here and say, it locked me out because I hit my loss. But, I could just totally see what's happening. Let's turn this off. Let's reset this. Let's unlock everything. Let's open everything back up. Okay, boom, boom, boom. And then you're going to be trading again. Because you can. And, this is another reason why it can be good to use Rhythmic to do this for you. Because I don't think you can override Rhythmics, can you, Lee? I've never tried to, but I don't.
In our trade, I don't think you can, no.
Yeah, I didn't think so. If it flattens you because you've hit your risk management level. No, actually, wait a second. If it's the trader defined one, you can.
So, yes. Yeah, Robert saying you can. On the trader defined one, of course you can. Yeah.
Yeah, of course you can. I never do. I've gotten really good because I specifically worked at the discipline to never do this. So I don't. But yes, you can override it. So don't rely. This is why I say, don't rely on the platform to keep you from, monkey trading and just being out of control. You need to be in control.
And really, the point of this is this should be a wake-up call. It should be a circuit breaker for you to assess. But I think most of the people that use this and then unlock it are in monkey mode at that point, and the revenge trading kicks in. If you're good, then it's okay. I've realized something's happened. I need to reassess what's going on, and almost start afresh on my second and final chance in this session of trading to see what's going on. But you need discipline in order for that to occur.
Exactly right. And what I ended up choosing to do, because I spent a good long time wanting this to work and trying to use this, and I finally gave up. So what I came up with was my own, a lot of you might know I'm a spreadsheet trading system junkie. And so I built a visualization spreadsheet that turns my screen red when I hit a certain amount of loss. And it plays a sound. I have an alert sound that says circuit breaker triggered. And that way I have to think about what I'm doing, but it doesn't get me out. So I, the trader, have to decide, do I get out or do I not? And if I don't, and I suffer further losses, it's on me. 100%, it's on me. As I don't want the platform getting me flat. Again, too often I have found it got me flat at exactly the wrong moment. Yeah, I was early. Yeah, I was taking some heat, but that was actually the exact level to add not to get flat. And so many times I got flat at exactly the wrong spot. And then I watched the trade go without me, and very annoying. So I, the trader, need to make that decision, make that assessment. And that's really important, I think, for everybody. So yeah, flatten positions when the loss rules are met. This is just a simple cat stop. It's a catastrophic hard stop. It can be either money-based or date-based. Date-based is interesting. As a day trader, it's not something I would use, but if you're some kind of a swing strategy or maybe an options strategy, and you figure, either I've made my profit or loss by this point, or I need to be flat, you might find a use for that. I don't know. But it's, again, under here, and flatten positions when loss rules met. So it's kind of the inverse corollary to flatten positions when profit rules met. It's just what amount. Now, this has to be a negative number. Unless I don't think they have fixed this. Yes, let's just turn it on. Oh, they have. It puts a negative there for you now. Okay, cool. Good. Thank you, Sierra. So this used to be, if you put a positive number in here, it wouldn't work, and you'd be scratching your head like, why the hell doesn't it work? It's because it needs it to be a negative number because it's a loss. Technically accurate. Okay, fine. But how many of us think in terms of, oh, how much did you lose today? Oh, I lost negative 300. We don't think that way. We think positive. So think positive, Anyway, so you set a number, and then that's it. If this is turned on, you hit that number, boom, you're flat. It's really quite simple. But this should be a cat stop. This should not be, your $100 stop. Don't do that. Obviously, this is not a stop you should ever hit. Quite frankly, you, the trader, need to develop the discipline to get out before this ever gets hit. You really don't want it to get hit. Of course, if you want to set a date, you can put a date in here. I've never, ever, ever touched that.
I think in the context of evaluations, the value of these fields is if you're running an evaluation account with whatever $1,000 daily loss. This is to stop you burning your evaluation fee. So you set this as catastrophic losses, maybe half of the maximum daily loss, this kind of thing. So it's avoid blowing the valuation account input. Is how I say it.
Yeah, totally right. And again, by itself, this will not keep you from then continuing to trade. Yes, it will get you flat at this number, but you can trade again if you want to, and you can blow up. So unless you're going to also lock for a minimum number of minutes to force you to cool off and go take a break or, whatever, you got to do something else if you can't develop the discipline. But really, that's what you need to be doing. You need to develop the discipline as a trader to just do the right thing in the moment, win or lose, and move on. So, let's see. Oh yeah, and of course, if you want to know more about this feature, read the docs. They are long. There's a lot there. So if you really want to dive into it, go for it. Help yourself. But it's not a long-term solution. So I do not recommend that anybody get too reliant on it. All right. So that is the nuts and bolts of the demo, really. Are there any questions that came along the way that we haven't already addressed?
No, we got the demo stuff pretty much covered as we were going through this, JVC. I noted one question from Alex about, why not trade more size versus multiple accounts and running costs,
yes.
which we're going to get to, because now let's look at the application of some of these facilities and trading multiple accounts. Here we go. So, people love and/or hate evaluations. They can certainly change your trading style and trading behavior. But I think if you're at a point where you've got a trading edge and you can recognize the evaluation accounts for what they are and not get drawn in, you can utilize them, because the idea of being able to spend, give or take $100 and then get to maybe a 5K no split withdrawal over a period of whatever, month, 2 months, 3 months, is not a bad return, because you are not going to get to the same withdrawal based upon depositing the same $100 amount in a cash account and trading a micro. Yep. So I like to think of this as an evaluation account, if you can trade, is giving you even more leverage on your capital. I'm doing some experiments at the moment, actually, on some different trading systems, because I've worked out various ways of hacking evaluation accounts, which are looking at, well, actually, what's the ROI if you spend $1,000 on multiple evaluations versus $1,000 on a cash account, and you compare your return on the cash account during the at least 10-day evaluation period and use compounding and things like that. But for most people, not having your own capital at risk, and if you can trade and you do have an edge, being able to turn $100 or so ultimately into a withdrawal is a good deal. So the interesting opportunity on trading multiple accounts, of course, is you can leverage this leverage even more. If you can trade up to 20 accounts, notwithstanding the running costs, because you're going to be looking at $80 or $90 a month on every live account that you have with an evaluator, you are still going to be getting a better return from the capital you're putting at risk than if you put the same amount of money in a trading account. But what you have to avoid is getting on the hamster wheel and resetting and failing and resetting, and before you know it, spending $25,000 on evaluations, which is why this business model is so successful. But for sure, you can utilize multiple accounts if you have a trading edge by taking advantage of the flash sales and promotions, using it on multiple accounts, getting to a split-free withdrawal level, and repeating the process. Now, towards the front of today's session, Alex asked the question, why not just trade more size? Well, the reason for not trading more size, Alex, is you're taking on risk. Yeah. So let's think about a typical, quotes, 50K evaluation. You might have up to 10 contracts available to trade with. You've probably got something like a $2,000 or $2,500 trailing loss limit, might be based on unrealized P&L, and maybe a profit target of 3K. If you are going to use 5 lots or 10 lots, all that's available to you, and you take a loss, you're really going to be eroding the drawdown available to you on a single account. Now, realistically, to go past a 3K target over minimum 10 days, so prorate that, $300 a day, you don't need 10 lots. 1 lot, maybe 2 lots is going to be sufficient, and just go for $350 per day, and just go really steadily and consistently. By multiplying up multiple accounts, you don't need to take on the added risk versus doing more size. Also, the evaluators will offer larger accounts, 150K, 250K accounts with bigger targets and more contracts. In the main, that's of no use to you anyway, because once you pass the evaluation, you are either subject to a scaling plan or you're subject to withdrawal restrictions anyway. So, okay, you're buying more drawdown, but you're paying for it. I think you can hedge your bets better and get a better ROI on the money you're putting at risk across multiple accounts. Grace just asked, what are evaluation accounts? People proving themselves. Yeah, exactly. Great. Top step trader, this kind of thing. Dominic saying essence of the essence. But I think you're liking what I'm saying. Okay. So the point is, manage risk, use the available drawdown to your advantage. But as soon as you're applying a lot of size on a single account, you're taking on more risk. I think if you put 3K of your own money into a cash account, let's think, what would that get you at a discount broker with $500 margin? Potentially, you could trade 6 lots. You wouldn't be able to because you're going to erode all the margin. But if you had a 3K cash account, how many contracts are you going to be comfortable trading? 1, maybe 2 E-minis? You're not going to trade 5, surely not. If you are, you're going to lose that account pretty quickly. And the same logic is what applies to evaluations. Jan saying, so you're buying yourself more drawdown because the smaller evaluations have a better drawdown to profit target ratio. It varies, Jan. The real small ones, the 25K nominal ones, they seem to be the least favorable. I believe the sweet spot is generally the 50K evaluation because you can make the target trading 1 or 2 lots and you have got a decent amount of drawdown, 2K to 3K typically, versus the 1 to 2 lots that you need to trade. So you're using that sweet spot and then multiplying it across multiple accounts. Then if you pass those multiple accounts, they each have their own withdrawal parameters. If, let's say you were trading 5 50K accounts, yeah, you could withdraw from 5 live 50K accounts at the same point in time. With the same limit. So some of the evaluators will cap you on your first month at maybe a 2K withdrawal. It doesn't matter if you're trading a 50K account or a 250K account. It's still your first withdrawal is capped at about 2K. So why pay more for a 250K account when you can only get 2K out of your first funded month? Why not have 5 50K accounts and be able to withdraw 5 times 2K? That's the mindset. Yeah. And controlling risk. So Alex, I hope that Alex saying maybe it makes more sense after building the account from 50K to 100K. Okay, Alex, what you got to be clear on, it's not a 50K account. Yep. And it's not a 100K account. When you undertake a 50K evaluation, your drawdown is, let's say, 3K. You are trading a 3K account. Yeah. 50K is a marketing term looking at the size of the account that it would be as a cash account in order to trade the number of contracts available if there wasn't any day trading margin. Yeah, think of it as buying power. That's really how the industry is misrepresenting this account size. Buying power is kind of the best way of looking at it. But any account, you get funded with any of these guys, if your funded account has a drawdown of 3K, you have a 3K trading account. Because you lose 3K, it's closed, you never had 50K. The starting balance might be 50K in Rhythmic, but if your maximum drawdown is 3K, you're trading a 3K account. So, building the account up from 50K to 100K, well, you take it there, you've made 50K. Now you're trading a 50K account. If you can do that, you can be trading your own cash accounts anyway. Jan is saying, should you even build a 50K account to a 100K account, or should just try to pass the 100K evaluation instead once you've already got the 50? No, I don't think you... My view on evaluators is it's about generating money relatively quickly from a low initial starting sum. Yeah, there is absolutely no point trying to pass a larger evaluation. Yeah, 50K is a sweet spot to pay more for more drawdown when, well, if you need 5K or 10K or 20K of drawdown to trade your 1 lot strategy, you've got a problem with your strategy. You shouldn't be trading at all. Yeah, if you've got 3K of drawdown, you should be comfortable trading 1 lot or 2 lots. Greg is asking, how many traders enter these things and actually become successful in securing trading capital versus those that flame out?
That's a really good question.
Lots of people enter because it's a really compelling proposition. There are stats, I think, on the Earn to Trade website. They show something like 18% of people pass evaluations. And they're doing this analysis on number of funded accounts versus new accounts. But that doesn't mean people, because successful traders might take multiple accounts. So I would contend sub 5% generously are actually able to pass. And then the people that are actually able to retain their live accounts and get a withdrawal is even lower. Lots of people blow up their live accounts in the first month or the first week or even the first day or the first hour because the monkey brain gets involved.
Yep. Notice that's the stat that they don't talk about. They talk about how many pass evaluations, but nobody talks about how many keep a funded account longer to the withdrawal point.
And I think Top Step made it very easy to look at the numbers on it. On Top Step, we've spoken about how paid out 2 million, 3 million last year, whatever. Now, nearly all of these guys offer split free. But otherwise, it's, let's say, an 80-20 split, 90-10 in some cases. But if a firm is saying, we have paid out 3 million, assume that they have had their 20% split from what they've paid out. So 3 million represents 80%, to the trader. So I can't do the maths in my head. Jan probably can. He's clever and like I am. But let's say the evaluator has earned on the profit split, well, over 800, 900K, this kind of level. Look on the Top Step website and their staffing. They've got 60 staff and a very glossy office in Chicago. The businesses do not make money from profit share with traders. These businesses make money from evaluation fees and resets and larger account sizes. That's the nature of the business. And you can love it or hate it, but it is what it is. And that's why it's something interesting to game and hack if you can. But if you go into it without a trading edge and without understanding the rules of the game and go in as well thinking I'm going to get rich quick, you're dead before you start, quite frankly. Totally, Greg. The trading industry, full stop, preys on people's dreams. Yeah, most people fail in trading. So that's the nature of trading industry. It's been that way since the early 20th century, and Jesse Livermore and bucket shops. It is what's this.
Who else are the winners going to get their profits from?
Yeah.
I mean, it's got to come from somewhere.
So Stephen said, if you have 10 accounts and blow them all up at once from the master, therefore, do you recommend using 8 linked, then leave 2 out to trade different strategies in case you blow up the 8 linked? Then you don't have 10 days downtime waiting to pass the evaluation. Well, Stephen, I'd recommend have a strategy that doesn't blow up accounts, quite frankly. Yeah. I think it's not about, if you want to trade multiple accounts to find out which strategy has a better chance, I think you are succumbing to the dream, not you personally. One is succumbing to the dream of getting rich quick. You should only enter an evaluation if you believe you have a trading edge and a process and you're able to pass. If you don't have that, why try? It's pointless. You're burning money. So if you are consistently profitable, and you can stick to a process, then you can start gaming this industry and passing multiple accounts. If you don't have an edge, don't pretend that you do. Don't trade till you've got an edge. Practice, learn more, study more. It's the only way. And good question. Which would you recommend? There are pros and cons to all of them. Why don't we move on to the next slide with a little wrap up and Q&A and call to action. So we've spoken, and most people who are TRG members, they know this anyway, but what we've done within Trading Research Group, we have put together our essential guide to trading evaluators. And this is a free online interactive course that actually clears up all the terminology in this industry, because although there's probably a dozen or so companies offering the same thing in futures, they've all got slightly different rules and parameters and interpretation of some of the rules. Here we go. TRG's Essential Guide to Trading Evaluator Programs. Do you want to expand the sidebar, JVC, so we can see the contents?
It collapsed. There we go.
Here we go. So we have put together a free guide which explains this whole space, because within TRG, we've got members, and myself and Jeff and JVC. We use these a lot as playgrounds, as practice, as ways of getting money. So we've put all this knowledge down so that you know what you're getting into. And you can sign up for that on the Trading Research Group website. We've
it's
also
free.
got, yeah, it's free. We have also got a companion course, the follow-on, once you understand the terminology, called Becoming an Evaluator Hacker. And this is where we go through how you can game evaluations and the mindset you need in order to pass evaluations, get funded, and stay funded. This doesn't teach you trade setups to pass. Yeah, you need a trading edge. But even with a trading edge, and even if you're consistently profitable, ridiculously, you can still fail evaluations. And then people go, oh, it's a rip-off, blah, blah, blah. Well, no, it's just you need to understand the rules, and you've got to play within the rules and take advantage of the rules. Yeah, and maybe adapt your trading system to the rules which are there. So Get Funded and Stay Funded, our follow-on course, talks about how you can become an evaluator hacker and consistently pass them, get them to funding, withdraw money, blah, 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 blah. And it answers a whole bunch of the questions that we've had in this about multiple accounts and should I take a larger evaluation. So we have these as part of our educational offer, totally focused on the evaluator space. We've also got a couple of courses that go through what we call our TRG basic playbook. It's how we trade using order flow and market structure and statistics and scalping price action. And we call this the art of tick making. And this is a paid course. It's very low cost. This is $69 standalone. And we have a starter course before that that introduces all the tools and terminology like footprint charts and volume profile and types of price action and scalping and the dome and how price moves, so that you understand the language and the terminology of the way that professional traders trade, and then how we apply that to a playbook of setups. So I use various trade setups. I trade every day, and we do them in our live sessions in TRG. They're the same setups I use to pass evaluations and take them to withdraw. So we've got standalone educational products, or you can join TRG as a member. It's only $99 a month, and you get access to all these courses as part of membership. You can join us trading live every day. We trade live every day, Jeff, myself, JVC, on our evaluation accounts, on our cash accounts. We've got a huge, massive video library, thousands of hours of videos, clinics, educational clinics, courses, us trading live. We've got online chat and Q&A.
Roundtables.
Yeah, and everyone is kind of the same mindset and same knowledge level. And what's really satisfying is we've got members who, since coming in, have been able to get to consistent profitability and pass evaluations and take withdrawals. And one of our guest trades, Heidi, one of our members, she's not on the call today, she actually traded live in one of our sessions this week. She took her first withdrawal from Earn to Trade this month, which is fantastic. She passed it a month ago, took her first withdrawal, $1,000, $1,200, since joining TRG a year ago, which is really, really satisfying for us. It means we do something right. Now, Alex has asked, which funding company do you recommend? Look, there are pros and cons to all of them, Alex, in part because of the different rules and parameters. This whole industry is becoming a race to the bottom. We work and we affiliate with all these guys. It's a huge industry. Yeah. Lilu, our friends at Lilu gave us an exclusive offer based on multiple accounts for this session, where on their 50K evaluation, and 50K I believe is the sweet spot, they are offering this evaluation for $55 first month only. And you can follow the link which is here, partner.tradingresearchgroup.com/Lilu55, in conjunction with the coupon code multi55. So after the first month, it will rebill at $180, or using discount code multi65, you can have the same evaluation for $65 a month for however long it takes you to pass. And you can use each coupon up to 10 times. You can have up to 20 evaluations at this price on this deal that Lilu have put together for us in conjunction with this webinar. Now, the street price, everyone advertises either 165, 180. Market price, street price on 50K evaluations is typically 85 to $120. So you can see this is still quite a tasty deal, and it applies to multiple accounts. So Lilu, Apex, and Elite Trader Funding are the companies that are really hammering the multiple account approach at the moment. At the moment in the market, this is about the lowest price level on anything that's multi-account. It's on a par with some of the Lilu flash sales. They've been good enough to put this together for us. You will find with some of the other evaluators, the gotcha on most of the multiple account evaluators is what's known as intraday trailing drawdown based on unrealized P&L. So it means that as your P&L goes up during the day, even on an open trade, your drawdown goes up. So unless you close every trade at your maximum open P&L high, you're actually making things hard. And we explain all this within our essential guide, the free guide to trading evaluation program, to explain the drawdown. It's not to say you can't pass it. I regularly take the trading drawdown ones, but you need a certain style of trading. You've got to exit on your limit orders. If you can't trade in that way, then these providers aren't necessarily the best for you. You need to look at a, quote, pro drawdown type provider, like maybe TopStep, maybe You Profit, these guys. It's worthwhile taking our essential guide, really understanding the mechanism, understanding the rules really carefully, and understanding which evaluator works in different way, shape, or form. But for sure, if you've got consistent profitability, then being able to do multiple accounts, this kind of price level, is a nice opportunity to kind of gear up and take advantage of the leverage. So Alex, as I said to you in the chat, the recording will be available tomorrow, and we'll send out an email link with the recording tomorrow once it's rendered at Zoom. So calls to action for you guys. If you're not within TRG, please check us out at tradingresearchgroup.com. We believe we talk some sense. Hopefully you've got a sense of what we're about between JVC and myself today, and the way we work and our approach to education and trading. You can explore our website, look at our educational offers. You can even drop in to one of our live trading sessions. Yeah, trade live every day. You can book on. And if you're interested in trading multiple accounts with Sierra Chart and that kind of thing, then there's a great Lilo offer, and we will we'll put those coupon codes as well in place in the email with the recording links that we send out tomorrow. So that kind of brings our talking stuff to an end, but we're very happy to get into any open Q&A around TRG, approach to education, trading evaluator place. We're not going to get deep into Sierra Chart or teach how to trade on this session. This is focused on multiple accounts and evaluations. But given you've got access to various of our members on the call, JVC and myself, we've all been through evaluations, passed them, etc. If you have any questions and you're not familiar with TRG, feel free to throw them in the chat and we'll talk around them.
I'll include one message. One thing I want to point out is that Tools of the Trader, the introduction to the tools that we use, is also free, in case you weren't aware of that. So I would suggest, if you don't currently have an edge, have a strategy that has a measurable statistical edge and know how to exploit it, you may, unless you've just got money to play with, you may want to hold off on going crazy with lots of evaluators, but definitely you take a look at these, because these will give you an edge. This one's free. Again, it'll give you a taste of kind of our approach and the way we teach and things of that nature. And then for a whopping $69, you can pick up this one, and this really dives into the playbook, and we'll hand you an edge. Quite frankly, it's going to take practice to get good at it, but it will hand you an edge. So awesome. Very nice, Jean-Pierre. Thank you for that. You're welcome, Robert.
Yeah, thank you, Robert. Thank you, Eleanor. Thank you, JP. Yeah, so actually some of the non-TRG members of this call, Open5, B2A, these are setups in our TRG basic playbook, which we trade every day and we educate on in our courses. The key to trading is having a playbook of setups that have got a statistical edge and sticking to your process of trading these setups. That's the key.
Yep. Be boring. Don't get creative. Don't try to improve on an edge that's been handed to you that works. Just get good at it. That's all.
To make money quickly, make money slowly.
There you go. Be slow quick.
Okay, yeah, thanks, Jan. Yeah, we trade our live accounts. We'll declare if we're in SIM or if we're in eval for whatever reason. But Jeff, JVC, myself, we trade live every day. We put it out there. Win or lose.
And we invite the members to take the driver's seat anytime and show their read, get a little feedback, instant coaching, etc. It's having been myself through all of the usual crap education out there over 23 years now that I've been chasing this trading dream. I've finally landed home, so very happy.
And we're glad to have you, JVC.
Oh, warm fuzzies.
Indeed. Cool. So
right.
I think with that, we will call it a wrap. Enjoy your weekends, everybody. What's left of it? And I guess for you guys in the States, it's still quite early in the weekend, especially from the West Coast. So, Alex, we will send details of the recording before the weekend is out. We are in the hands of Zoom, but you will get that and we'll reiterate the coupon codes as well. So with that, thanks for attending. And TRG members, we'll see you at our Sunday Reopen meeting on Sunday.
Tomorrow.
And everyone else will just do a quick follow-up just so that you've got access to recording, etc. Thanks for attending and have a great weekend.
Bye, all.